In one of my previous videos, I mentioned this word noise. I told you that the lower the time frame, the higher the noise. Simply it means that noise will increase when you go each time frame lower. So in this video we will talk about noise and we will understand what it is exactly. Sometimes what happens is you make your judgment, you say that the stock is going to go up, you take a trade based on your judgment, then you see that your stop loss gets taken out, and after your stop loss gets taken out, the trade continues its move towards your target. So this taking out of your stop loss is called noise. Let us start with the analysis of Bajaj Auto. We are on the weekly chart as usual. We start with our analysis from the weekly time frame always. What do we see? We see that the price was in an uptrend. Then it made this low, rejected this weekly support. Then again went up, made a lower high, and then with this big red momentum candle broke this weekly support. Interestingly, we are seeing a perfect M-top pattern in the weekly. Now after that we saw this rejection of this monthly support and the price went back a little upwards. Now it is rejecting this weekly resistance. There is also a wick sticking down. We also see that the price is trading above the EMA. However, because of the lower highs and lower lows, and because of this beautiful M-top pattern, we can say that the overall bias is weak. Let us use the Fibonacci tool if you can see anything. Yes, the rejection is lying just at the 0.5 level. So this area appears strong to me. So overall a weak bias from the weekly. Let us now go to the monthly. In the monthly, we are seeing a W bottom pattern which is bullish in nature. The price is trading above 50 EMA. The price has broken this monthly resistance and is now giving a pull down to reject this support. So the monthly time frame is clearly bullish. The weekly is bearish, the monthly is bullish. Let us now go to the daily. There are opposing views from the weekly and the monthly, but the daily time frame stole my heart. Look at this level, perfectly coincides with the 50 EMA. So this area of resistance lines up perfectly with the 50 EMA, and look at this red candle. The wick is sticking out, rejecting both. We learnt in the EMA chapter that if an area of support or resistance lines up with the EMA and a candle rejects both of these levels together, then it is a strong rejection. The area is strong. Let us use Fibonacci. How beautiful. 0.5 to 0.618 perfectly lining up. Fibonacci is giving us that this area is very strong. Moreover, look at the candles. They are getting smaller and smaller, clearly squeezing candles. There is no good momentum in this up move. Just compare this up move with this down move. Look at the candles here. Look how strong is the momentum. This is how a good momentum move looks like. The bodies are big, the wicks are small, right? Now look at this up move. You can clearly notice this difference. Smaller bodies, wicks sticking out, no good momentum. So the daily is also giving me a bearish view just like the weekly. So I went down to the 75 minutes time frame to see what is up. In the 75 minutes I see a rising wedge pattern, a good rising wedge pattern with multiple rejections on each side. We now have multiple confluxes from the higher time frames. The weekly is bearish, the daily is bearish. Using the 75 minutes, we find some sort of confirmation to go short. That confirmation can come from the break of this rising wedge pattern. Let us see, do we get it or not? Immediately next candle, the rising wedge pattern is broken with this big body, a perfect scenario the way we want it. Now I will obviously enter short because this candle has broken the EMA as well as the rising wedge pattern with momentum. So I'll go short at the close of this candle, keep my stop loss above this candle and go for 1:1. Now let us see how the trade played out. Immediately the next candle, our stop loss gets taken out. We are out of this trade on the immediately next candle because our stop loss is hit with this wick. The wick is rejecting the the wick is rejecting the weekly resistance and taking out our stop loss, and now the price is back here. Now let us see how the trade moves further. We are out of this trade, right? Now the price moves down. And our target is hit. With this candle, our target is hit. However, because of the noise, because of this wild swing, it took out our stop loss and then continued to move on our determined direction. So you can see that the analysis which we did was right. Indeed, Bajaj Auto was weak, but because of this wild swing, because of this noise, our trade failed. The analysis was right, but the trade failed. It is what we call noise. So when we take the trades from the lower time frames, the more lower you go, the more noise you will encounter. In the 15 minutes, you will see that there is more chance of noise. Now let us see what if we had taken the trade from the daily time frame, that is the higher time frame than the 75 minutes. We were somewhere here. Right, now let us go to the daily. Now, if we were to take a trade from the daily time frame, an aggressive entry would already have been taken here because I am clearly seeing bearishness. One could have entered short on this candle itself. However, we like to wait for confirmations. We will wait and see what's up, what's next. The next candle we get is a covering candle. It is also rejecting the EMA as well as the weekly resistance. A perfect confirmation. Now we can go short. Let us do it. We will go short at the close of this candle. Keep our stop loss just above this candle and go for 1:1. Now let us see how the trade played out. The trade played out perfectly. There is no noise from the daily time frame. The trade went as per our direction and we got our targets. So I hope you understood the impact of noise. It does not mean that taking trades from the lower time frame is bad or something like that. Or it does not also mean that taking a trade from the higher time frame is better. Everything depends on you, your style, your preference. You may like to trade intraday. I may like to trade the swing moves from the 75 minutes. Some other person may just like to trade positional moves from the daily time frame. It is us who need to identify what do we like, what suits us, what suits my personality, and this can only be done once you start trading. So I hope noise is clear. Thanks for watching. Goodbye.